also doing Thursday's price action analysis as well. Um, Something came up yesterday, so I didn't have enough time to do it. So I'll be breaking down yesterday's strong downside move and today's mad reject. Today's big um, rejection of that downside move correction. That's crazy. Quick 200 pips, yeah. What is going on? Good to see volume back in the markets after some ranging slow volatility days and weeks. So that daily candle is literally more volume. We had 130 odd pips last week's volume, I think, something around there anyway. And today's volume, that was last in a full week, and from range to range, and yeah, high to low, and yeah, this is beat that by about 70 pips in one day on a Friday. So happy days to take that. In terms of, I'm going to just get a clean chart up because these key levels are pretty annoying looking in the time frames. So I did have I didn't take that trade as well. Something I looked at. I've been back testing Fibonacci, as you can see. I did notice a fib level there as well. 70.5. On the daily it does close just above it, but it would have been quite an aggressive entry. Just something I noticed. I thought if we do get that push up, then maybe buyers are entering the market at a deeply discounted level, and that could be the reason why. Also, we've grabbed liquidity from these lows here and these lows yesterday, but we are still in a corrective structure. We printed a new low on Thursday, so we're still in a downtrend there, but strong bullish correction, massive correction, similar to this move there, pretty much identical. As you can see, this bullish candle just engulfs the daily price action. So we'd obviously expect a deeper pullback as well now. In terms of starting to see some more buyers, some more upside market structure, I would like to see this low be beaten, as this is the high point from this low created here. So I would like to see price trade above this level and these highs, and start targeting areas of liquidity around here for more upside and bullish market structure. This is also 133. It's around the 500 level as well, psychological level. So for trades for me, I'd like to take safer buys if we see bullish market structure, break and retest of 153, 500 really on the lower time frames, with there being solid 30-minute candles at least closing above these sensitive price areas here as well. There's 4-hour resistance. As you can see, it's respected many times before it has that push down. Respected for over a day before yeah, about 4,826. So yeah, I'd like to see price trade above there really. Yeah, in terms of potential trade opportunities, I'm going to go back onto the 1 minute time frame and my chart with key levels. terms of the downside moves, let's go back actually. Right, so during Asian 6 o'clock candle, we do see a bearish pin bar. For me, that'd be a sign of exhaustion, really, at these lows here, and the failure to close below it. So if I was to see 4-hour support formed and more signs of exhaustion at these lows, then I would have been happy to start looking for buy scalps above 152 and started scalping it back up to the top of the range. However, this didn't happen. The 4-hour candle just opened with no top wick and just pretty much tiniest top wick and just smashed down, really. Very strong bearish momentum. In terms of trades, potential trades, I like this one here. Slightly aggressive though, to be honest, because that is quite a small bearish candle, but I do like how it's wicked perfectly to 151, and as closed bearish, we've got bearish price action as well. So we've got a strong trend. We're early on into London. What I do like about this, basically, I seen this entry, a potential entry, but like I said, the size of the candle put me off a little bit. But I did like how this candle, the 8 o'clock candle, pushed up and made that top wick and then rejected the key level. And I was thinking of maybe entering this trade, but the 1 minute candle just closed, and just literally as it closed, it just literally just didn't. It just went. You see, there's no top wick on it. It just went instantly down, and by the time it was down here, I wasn't really feeling it. I just thought, I wanted to be up here. It's very important to have your entry close to the key level to have a good enough R&R. So it's quite difficult really sometimes 1 minute time frame. It's one of the things I'm struggling with at the minute is just how quick you have to be. And to be fair, that was partly my fault because I got up kind of late because I had a bit of a lie-in because I couldn't sleep the night before. So I need to really try and get better sleep really, because it is affecting my trading slightly because I've got up late for the session. I've woke up. I've kind of seen this pretty much on my trading view on my phone really. So, but yeah, it kind of just went to the downside straight away. Didn't give me. I was kind of hesitated because of the size of the candle. But yeah, anyway, there was other trades I could have took as well. I was working at this point. So let's see the best ways of taking these entries. So you could have closed your majority position at this psychological level, and there's no reasons why you shouldn't extend the trade as well. There's not really a significant upside push. You can see it, but it's got a corrective phase as well with the slow movement, choppy movement to the upside. Signs that we're in a corrective phase here. The bulls are basically struggling to pull back significantly. So for me, that's a sign that the bears are in control. And then we have break, a new low created. New low created here, doesn't quite reach the key level, but also you start pushing, pulling back, but we don't exceed this higher low here. We find resistance at these higher lows again, double top scenario. Let's see if there's any confluence with, right, okay, yeah. So again, price action at the minute is not really on opening candles of 15.30 or even the 4 hour, just basically new candle openings, where you're having instantaneous moves to the downside and you're not really getting that perfect upper. Sometimes you are, of course, but sometimes you're just getting no no wick being formed in the opposite direction of where you think price is going to go. You're not getting that top wick before your downside move or that bottom wick before your upside move. It's just you're having strong volume and just instant moves down, which I can imagine is catching a few people out and making them miss entries, me being one of them. So I know this is another scenario here where, to be fair, it has made, is that 15 minute? 44. No, this is the 15-minute candle, isn't it? So, let's double check. Yeah, so it's not printing much of a top wick if it is, or if it is, it's not really printing much of one at all, and it's getting that strong push to the downside. But just going off price action, we are creating lower lows and lower highs, forming resistance, double top scenario. This is nice, really. You can take a trade. If I was to wait, this is for potential entries if you didn't catch this one. Quite a difficult entry to take again, like I said. In fact, probably risky to be honest. Probably not the best trade to take because you are slightly above these highs here, and it's quite a weak candle to end off. So maybe that's just a missed opportunity. Could also have just took the trade if you close below the level, but you'd have to bear in mind. London Open is in 10 minutes, and you could get that more of an upside week, more of a liquidity grab on London Open. So probably not the best setup to take. You could have had a stronger pullback to 152 potentially. Yeah, so I think this is probably the best play really. So you have the new low printed. Price comes back to retest 151 500. It fails to trade above these highs here, so it fails to break that bearish market structure, and then you could have slightly more aggressive entries here. If you saying that, I don't like the fact how small these bearish candles are in comparison to this bullish candle, even though they are consecutive. I don't like the fact that it's similar size to this, and 1, 2, 3, 4, 5 candles, bearish candles, have not even covered that one bullish candle. So for safest entries, it would be at this point below the low here, and then it's quite a small R&R at that point, so not the best. So not the best trade to be had really. And then let's play the next 4 hour. So then we've had 10-hour candle open around here. We've had that nice double bottom scenario, multiple rejections of 151 200. Another double bottom there, and then you've had that push up again, fails to trade above 151 800, and this is, I do like how price failed to hold above and trade above, carry on. This is just the pullback, really, isn't it? It's 10 a.m. pullback, so this is the 4 hour top wick, and we have that low broken, and that's a sign that bearish price action could be on its way. Also, oh no, if it's done. Right. So a 4 hour candle, you have that 4 hour top wick formed, and then again, I like how price action breaks this low here. The bears break this low. Instantly, that's the first indication of this bearish structure coming back into play. And I do like this double top here. I do like how we respect this high here, double top. Maybe enter off this second candle here. And then about 10 pip stop loss or something. You could have rode themselves. Once you break this low here, stops at break even. This candle would be quite worrying to be fair, as you have closed back above this low. So you would be having stops at least at break even at this point. Probably just break even because it wouldn't be really worth securing anything at that point with it really. So you just put your stops at break even as that low's been breached anyway. And then on this scenario, you do get that candle, this bearish candle rejects the bullish push up, weaker bullish candle, sign of exhaustion, and then a closure below this low here. And once you get that, there's your continued downside move. No reason to close the full position here, as you are getting minor reactions to 151-200, which is pretty much rejected as well after a couple of minutes. Rejected there, and then once you get this closure below here and the break of this low here, get that continued downside move. Look at how perfectly price reacts to 151 as well. Really nice reactions to the key levels. Recent price action this week. Psychological levels, should I say. So yeah, you could have bagged yourself, you could have had your final TP there, or you could have carried on holding if you had a stronger higher time frame bias. In terms of targeting higher time frame areas, you could argue price was on its way, originally was on its way to these lows here. That was the initial target. On my breakdowns on previous days, it completely met that at during London session, didn't it really? In terms of other targets, yeah. So once these lows are taken here, these lows are taken here, and then price, you could argue that we're going now to these lows, which it does perfectly. Grabs the liquidity from these lows as well, also matches up perfectly. And then once that liquidity is grabbed from there, that's job done. And then they're off to grab the next area of liquidity, which was these highs there, which all the sellers have jumped into. So today they've grabbed all the liquidity from the sellers of any early sellers which are still holding positions from this move up here, and these breakout sellers from down here. So yeah, back to breaking down price action. So you could have had that higher time frame bias in mind, but you could carry on and target the next set of lows on the higher time frames if you had the price action confirms. Now, again, what am I looking at? Wrong bit. Yeah. Where am I? I'm lost now. I don't know where I am. Can I make sure? Daily it's an app, isn't it? Fucking hell, what's going on? Right, it's got me down there, isn't it? Of course it is. So yeah. Alright, okay. What am I doing? Absolute brain fart there. So yeah, this is all during pre-New York. So yeah, and then we get, in terms of extending your trades, if you had that higher time frame bias in mind, you could be like, right, okay, stops at break even, I'm just going to run a tiny position. I'm going to run it to the next 4 hour lows, which you've just mapped out on the higher time frames. In terms of, with you having such a small position left on the table, you could argue that I'm just going to leave my stops at break even. And to be honest, would you really want to be monitoring price action on the 1 minute when you are leaving runners? You could have a certain, probably maybe the best way to do this is if you are in a trade around the price area where you think there's potential for it to be a potential swing idea, I could open multiple positions which accumulate to that risk percentage of, say, 1%. So I could open 2 positions of 0.5% or 0.33% positions in 3 of them. So you could have in mind, so I could have, well, let's say, probably 0.75 one position, and then 0.25 on the second position, because you'd want to capture most of the move and secure a healthy amount of profits in an R&R during your first take profit, so you're at least catching a decent move, and then letting 0.25, for example, run to your higher time frame areas. So let's monitor price on the 30 minute. Let's say I was swinging this trade. Let's monitor on the 30 minute. Yeah. Okay. Right, happy days. So this, from a swing trade perspective, this is my monitoring on the 30 minute, and this is perfect really, because just simple price action really, isn't it? So I've got my position there. I've took the majority of my TP at the first TP, at my first psychological level. I'm letting my runners run, and I could secure a percentage at the next TP, or let it run completely to the higher time frame target. But as you can see on the 30 minute, there's no reason. If you were trading the 30 minute, there would be no reason to close. Closes below support, retest of support, minor bullish candles, exhaust small tiny bullish candles, and then continue closes and breaks of lows, closes below, and just continued bearish price action to your higher time frame level and the low you're targeting, liquidity I'm targeting. So in terms of watching the 1 minute, if I'm doing swing guy days, set stops at break even. When I get to our first TP area, switch to a higher time frame candles, switch to a higher time frame chart, just so I'm not sending myself nuts watching the 1 minute for about 30, 1 hour, 1 hour 30, 2 hours, 2 hours 30. So yeah, for 2.5 hours instead of watching 1 minute for 2.5 hours. That's a lot of 1 minute candles. So probably best off not doing that. In terms of looking for potential reversals, so you can see the first sign of a reversal here as we have the double bottom scenario, strong bullish candle closing above these support areas it's broken before, and then you get break and retest of that high during the Australian session. Break and retest of that high, like I was talking about on the 1 minute market structure before. I was talking about another rejection of that high, and also 151,200, and then you get break and retest of 151,200 again. Price just consolidates. New high, new low created, higher lows created, higher high created, higher low again. This is interesting. So we have this big upside move today, but London session looked quite shit. Well, the start of London Open, quite shit, no volume, slow volume. Let's have a look for potential trades at this area, because we do respect 151, 500, but I wouldn't have liked this bearish, this rejection of this resistance here. It looked quite bearish to me. Let's have a look on the 1 minute. That is dog shit. I won't be trading that. It does respect 151, 500, and I do like the fact that we're having very specific lows respected with rejections, candle body closures. I do like that, but I just don't like this. I don't like this. So yeah, best off to leave that and wait for trade opportunities above 151,800. Back to the 30 minute. Let's have a look at the 4. Yeah, back to the 30 minute. You notice as well how 4 hour closes bullish. Let's have a look at 4 hour actually. So the 4 hour at this point, we still are in that pullback phase. Bearish market structure overall, pullback phase still. Multiple rejections obviously, and 4 hour wick rejections of 151,200. Nice strong rejection here, do like that. Decent bullish candle throughout Asian, but a rejection of 151,800. back to 30 minute. Yeah, quite choppy, isn't it? It's quite slow, isn't it? Slow, it just slowly creeps up, slowly. But it gets there. Does the business. So now we're approaching these lows which price broke aggressively out of. There's also a potential entry I had mapped out as well. That's not the 1 minute. Is it the 1 minute? Fuck's this now? Fuck. Weird news today. Yeah, this is wrong. It's showing 30 minute candles and I'm on the 1 minute. Oh, fuck, I'm fucking refresh this shit. Right. Here we go. Oh, right. So yeah, this is what I had mapped out before. I do like this little order block forming above this. We have a new high created. I do like the little order block created just above 152. Stop loss. Basically, if the price would have engulfed this bullish candle and closed below this high it's just created, then I would be getting out, to be honest, anyway. So I think it's about 7 to 8 pips stop loss, but I'd only be willing to, if I did have closures below these zones here, about 5 pips, 4 pips, 5 pips, 6 pips, I'd just be closing the full position anyway, to be honest. But the price does close above here, candle body closures above this minor resistance here, but you've got to bear in mind these wick rejections to the left. Next candle breaks that wick rejection and close bullish and just carries on this bullish upside move. Quick 12 pips, 13 pips, and then we do have a pullback corrective phase. You could have either taken a PC position after this strong bearish candle, or maybe after this weaker bullish candle you could have took a little bit of your position, or you could have just left it completely and just put it break even, but there's a good chance you would have been stopped out here at break even with spread and stuff like that. So maybe just taking, in this scenario, taking a little piece of the position after this bearish candle and just letting the rest run. But yeah, this could have been a frustrating trade really. Depends if I'd put my stop loss right on the candle entry, it probably tapped me out. Yeah, it would have tapped me out. Anyway, it does retest this high here, this previous high here, and then chops back up to the upside. New York bottom wick. Look at how the bottom wick closes bearish, but respects this low here. Fails to close below it. Price snaps back up, and then quite a messy price action. Really, for the full 1 minute anyway. Quite indecisive. It's not indecisive. It does chop up, but it's quite slow really. But it does fail to break lows along the way. Doesn't break this low, doesn't break this low, doesn't break these lows, doesn't break that low, and just makes its way up slowly. Just another push up, doesn't break these lows, up it goes. see if any potential entries could have got after the 2 o'clock candle. 2 o'clock candle opens, slow price action. Now this could have been a nice one. So you have the 15-minute candle closing above. Let me just double check that. Yeah, right. So this could have been a nice entry. 15-minute candle closures above. We're also at this support level now. So we're at these support levels. So it's a sticky price area really. But you do get a 15-minute closure above. You get an hourly closure above the 152,200, and you get hourly candle printing, the bottom wick, and also you get the 15-minute bottom wick being printed. Off it goes. Jesus. What time is this? This is a nice one. 245 closes above 152,500. Pullback. Reaction. Support formed around 152,500. Go on then. Close above this high. This would concern me a little bit. Exhaustion just above these highs. Stops at break even. There we go. Get that closure above these minor resistances. Another strong push up. No reason to close, no reason to close. There we go. Gets there. See how we have this little push down? It's like a little mini order block. Mini order block here. And we get support form within that order block after this strong push down. Pushes up. Hits 152,700, reacts to it perfectly. So that would have been a clean entry. 15-minute closes above. Pull back on the 15-minute. Take the trade. About a 3-to-1 risk reward. 8 pip stop. Stops below these lows here and a little bit further down. Let's have a look at this an entry around there again. So we got 15-minute. Yeah. I don't like the weakish candles around here. I don't like that. Maybe I'd enter off this candle. With it being a stronger bullish candle. Closing above these highs there as well. Maybe be like, right, okay, a bit more bullish price action coming into the markets. A bit more, volume coming into the markets. The hourly has closed above here. The hourly closed above 152,200. Also, we're having that bottom wick being formed potentially. We're having multiple rejections of 152,200. Decent support formed multiple times. And also we're getting these little higher lows here. So you enter the trade and enter the trade and get these little minor pullbacks. Notice how price is still supporting, we had a minor pullback, we're still supporting the double top highs here. Strong, and then we get that bullish close above this minor support here, minor resistance, sorry. And now the next area of interest would obviously be these highs here. Get a candle, bullish candle, but I'd still be cautious. Oh no, we have had closures above it, and we have brought the wick. And we have a little slight pullback, and then consecutive bullish candles. Also, this is the let's have a look. Oh, there you go again. Oh no, we do get a tiny. Oh no, we don't. No bottom wick. Again. Right. Yeah, so this is the 15 minute. Alright, okay. So the 15-minute close below it. 15-minute close below it, however, we did get strong bullish market structure approaching it. We've also closed back above this range. Closed back above this range. Double top. See prices reacting to 152, 800 multiple reactions to it. But we do continue up, I think. So at this point, you'd want to see closures above these minor resistances to extend potential runners or trades or scaling positions. Got the new 4 up. Ooh, heavy lad. So there you go, you see them signs of exhaustion, signs of bullish, exhaustion, multiple rejections of 152, 800. And then once we close below here, you get that strong bearish candle. It would be a good idea to close any potential runners, or just get stopped out at break even at this point. And then price does eventually go and retest that area of interest we were talking about. Retest that low, these lows here. And also grabs liquidity from these, from this bottom of this candle there in the 30 minute. So there you go. Started to retest form support above these lows here. Notice as well how the 30 minute closes just above these lows. I do like that. $4 o'clock candle. You'd like to see closures above these highs there, correct the downside move. See potential higher low formed here, and then you'd sort of see a new high, recent higher high formed to take trades back up to 152, 800. Sweet Caroline. Da, da, da. There you go. There you have it. I'll be fine. Da, da, da. Never feel so good. I'll be fine. Bear in mind. No top bottom work on the 4 hour. So is it even the 4 hour? I don't even think it's the 4 hour, lad. Nah, it's not, mate. It's not the 4 hour, mate. Oh, yeah, it is. No, it's not. Six o'clock. Alright, alright. Yeah, so the news 4 hours at 6 o'clock. Obviously, it's 2 o'clock when you open the previous one opened. Look, you know, get with it, lad. Right, here we go. Let's continue breaking down price action. Lovely moves later on in the sessions again. Shit, man, I need to be on it. Fucking hell. Seriously. I always think I've missed a move. Always. Saying that though, this is mad, to be honest. This is mad. What's going on here? What's going on, lad? 6 o'clock, 5 o'clock, we're getting fucking 50 pip moves, mate. Come on. Anyway, let's keep breaking this shit down. Double bottom, failures to breach these laws. It's getting boring this now, isn't it? But it works. Breaks the high, respects it, respect it, forms support with it, breaks this high, continuation. Target these highs there, them sellers. Thank you, sellers. Thanks for your liquidity for taking it back. Discounted price levels. So get a little fib on it, mate. So a fucking fib on it. What the fibs are saying. Quick little fib, mate. See if that discounted and that. Oh, mate. Stinks. Fucking stinks, mate. 79%. Failures to close. Failures to trade below these lows. Big dirty rejection. Off your fucking pot, mate. You're off. Consolidates to 50% and the psychological level pulls back. Lower high, higher lows. Off it goes. Break and retest of these highs. Go on there, mate, if you're offering. Be rude not to, mate. Thank you very much. Take another fucking 2.4 in there. It's just fucking off to the moon, really, mates. Taking the piss. But that is actually fucking beautiful price action today. What the fuck? I didn't trade a single piece of it. Yeah. Wow. Trending markets. A finger fucking beauty. So, things to know. Again, it's never too it's never too late in the session these days by the looks of it. Asian sessions are nice, but I don't trade them at all. But I do work and get back at a decent time around 3 o'clock, and there's still moves to be had. Clearly, breaking down price action for the last few weeks, there's been multiple days within the week where there has been moves to be had within these later New York Stock Exchange Open and beyond sessions, and the later Oceania. If I'm saying, yeah, the all later sessions within the day. So yeah, very surprised that this bearish price action was completely corrected, and we are now trading above this high I was talking about before. See if we get that 4 hour closes above, and then pullbacks weekly candle in terms of trade ideas. Let's have a look at the weekly, because it's just not fucking mad. The weekly's bearish, but it's strong pin bar. Yeah. Right. Right, we could be seeing upside. Oh, for fuck's sake. Fucking keyboard. Need to get an indicator there. Right. Fuck off. Oh yeah, this one that's up as well. Weekly high to low. Beautiful rejection rate to the 70.5 there, lad. Fucking hell. Screaming buys, kid. Right. Working Liverpool, that's what I'm doing this my accent. Ooh, that is lovely, mate. So we have weekly resistance at 153,800. So that is a very strong level. So if price trades to there, which we expect it to, I cannot be taking 1 minute trades around that level until there is stronger intraday candles closing above these levels of 153,800. I would like to see 1 hour, 4 hour closures above this level for me to be confident in taking buys above it. Otherwise, it'd be handy to, it'd be smart to watch price action, or just in general watch price action above 153,800. Look for potential reversals at this level or potential buys above it once we get them intraday candle closures above this weekly level. For me, after that Mad Friday, I'm going to go for, obviously we're still bullish on the weekly. We have broken this weekly low, but we have failed to close below it. So this still being respected for me on the higher time frames. This could be a liquidity grab. We've also come down to a deeply discounted level of 70.5, and this could have been a liquidity grab for a continued upside move on GJ. I'm just going to add this to my favourites list as well, just so I can just go on it and look at it on the weekly time frame and stuff. About 10,000 lines in front of it. Yeah. So yeah, bullish bias for me. But if he was to get a weekly candle, push weekly candle up and push above here, and then we start seeing rejections above 153, 154 and 153,800, and we start seeing price rejections around these levels, and we start pushing back down, this could be we could be getting a wick fill. And then also, interestingly enough, 153 psychological level is pretty much where the weekly candle body is closing on this weekly time frame now as well. So that would be also another strong level. So we could either be interested to see if we get that Monday, if we get a Monday buy push up, and that weekly top wick potentially forming. We could get price above 154 or reject off it and around it. And you would expect potentially then, if we was to reject it strongly, we could get that push down and get that weekly wick fill or something towards that weekly wick fill, which has just been formed. Otherwise, we could also get a push down on Monday, Tuesday, whatever, towards this weekly level of 152. I'm liking how the weekly candle body closes. I'm noticing now that these weekly candle closures are at flat levels. So we've got one at 153. It's not closed yet, but it's up and around there. You wouldn't expect too much volume in and between it. So it'd be nice to see if we had that. It's 153,500 pretty much. 153. And we have got a weekly candle closure here at 152. So if we was to get, say, Monday gave us that weekly wick down first, rejection of 152, and then we had that bullish upside move and started getting intraday closures, you could expect price to potentially come and test these resistances here at 154, and then potentially, if we get them, count them intraday close above it, start trading above 154, and finally go on to test these highs at 156. So yeah, that's what I'm seeing pretty much on GJ at the minute. It's starting to interest me a little bit more compared to gold at this minute after the price action the last couple of days. But on the weekly, it's still kind of messy, isn't it? It's still messy, but we've still got that bullish bias intact. But yeah, pretty dog shit in it really on the day and stuff, and quite messy. But I do like these strong volume candles we're starting to get. What else? Gold. Let's see. Gold. Decent New York session. Don't really like that. Not for me, pal. Lee like that though. I'll do that. Need to look at the higher time frames first again. Stop doing that. Right. Nah, mate. Not really feeling that, to be honest. You could argue that you have the 2 o'clock candle and the hourly close above. Let's see what it looks like in the hourly. Not for me, Jeff. Nah, mate. No retest. I would, if you had an hourly closure here and then a retest of 180.3, that'd look a bit cleaner. But you'd also have these areas, these sensitive price areas to worry about here and here. So probably not the best idea to trade it. Nah, mate, not for me. That gold's looking poo, mate. Clear, safer buys above 1812, and then you're targeting these highs here, liquidity above these highs, and extending the trades, probably capturing some profits there, and then looking to trade above. So still that idea, the bias is still intact, but we're having that monthly top wick potentially on gold, and I do anticipate that we could go on to correct some of this bearish structure here and start. They could use this as an opportunity to grab some liquidity from these sellers, grab a deeper discounted price. So target entries at around 62% of this total range, or 70.5% of the full range. So let's go back on that. So look at areas of liquidity they can target. Good target, yeah, that looks good, to be honest. I like how the 62% level is at this area here. Obviously, a lot of sellers entered the market at this point. As you've had the break of these lows, sell stops will have been activated here and here. And with a 62% retracement, you'd be grabbing liquidity from these breakout sellers. So that would make sense to potentially for price to go up there, and then if we started seeing rejections at that point, you could have a swing trade scenario on our hands, a nice swing trade, potential entry. If we started seeing rejections at 62% level, obviously around these support levels as well, something to keep an eye on. So yeah, that's another little extra bit of confluence to my bias. So yeah, I won't be surprised if price come and traded to this level. So in the meantime, could continue playing these buys. Safer sell was below. Some of the changes now seen as though the bullish price action. The bullish signals have played out. Intraday closes above it, they're played out for buys, so intraday closes below for sells. So you know what I was thinking now as well, I wake up in the morning and I'm not really like focused like I am now. I need to be spending a good half an hour before my trading session, a good half an hour just looking at the charts, analysing, refreshing myself with my trade ideas, and just focusing on just having more focus going into the session instead of just acting more reactively and just not being as prepared. Like this is really good for me breaking down price action now and stuff, but I'm in a really good focused frame of mind and I'm a lot sharp when I'm doing this. Like I need to be getting up in the morning and doing this in my head and just breaking down, refreshing, like reminding myself of my biases and where I think price is going to go, and just keeping in mind and just really plotting out my trades for the day and putting more time into it in the mornings. Just bringing more discipline into my trading day and, like I said, more focus. So that's something I'm gonna do for Monday. In fact, well, I won't be trading Monday because I'll be working in the van. But yeah, for Tuesday when I'm working from home. That's pretty much everything really. I'm gonna mark this out now. No trades on. Big letters. No trade. No trade zone. Right. Happy days.